Hi guys, this is Teacher Party. So we're still working with the accrued expense. Now remember the question said, we're still reading on 1st of March 2023, Janice Flores shop based in Parktown received cleaning services invoice from Kulula Cleaning Services Ltd for a service they did in January 2023. Jenny was not able to pay for it yet as the accountant went on a sick leave for a month without informing her of the missing invoice. Their financial year end is 28 February 2023. Ne? So the first question, remember I started with BC in the previous video. So the first question says identify, discuss, and conclude on the elements on the financial statement in the transaction above. So I can identify something that looks like an accrued expense. And then and remember in the videos I've done before, this is why I did that extensive theory of what is what. So liabilities, if you're still struggling to remember what a liability is, go to the liability video. I did it not so long ago, maybe a day or two before I posted this one. So check that video out and then come back to this, because if you're still struggling as to how did this become a liability, I did mention there that an accrued expense will be recorded as a current liability. And I did explain what is an accrued expense. It's when an entity pays for the services enjoyed, or for the services incurred later than the period when the services were incurred. So if the payment is done later than when the service was received by an entity, then it is an accrued expense. So it can be a service, it can be goes in terms of like stationery, packing material. So if we receive materials first before we even pay for them, okay. So this also falls under accrued expenses, especially if that material is something like packing material, is something like um tangible things, stationery, it's something like cleaning material. Okay, so now when we recognize the first element, it looks like a liability because why? It's a present, because we said in liability is a present obligation. Obligation means a duty or responsibility that an entity has no practical ability to avoid, to transfer an economic resource because of the past event. Okay, so Janice Flores shop, now this is where you apply. You must explain why you think this falls under liability. Janice Flores shop hired a cleaning company, guys, to perform cleaning services in January, and they agreed at a rate of 1.5. Ne? The cleaning services company, what is the name? I think it's Kulula Cleaning. The Kulula Cleaning Company, after they accepted the proposal or the contract, they had to release one of their employees to go on site and clean the shop in January. An invoice after the service was done, before the service was done, there was a quotation on the fee that's going to be used. After the service was done, this is standard business procedure. That's why now you have to think as if you have been in practice. You can't limit your thinking to grade 12 last year. You have to think as if you were in practice. Okay, so when the agreement was done, it was either verbally when the owner said, okay, come through, it would have been verbal. It could have been the owner of Kulula Services sending Jenny, the owner of the florist shop, a service level agreement or a contract for them to sign and agree that the person is coming, so that even if they don't pay, this becomes legally binding. Legally binding. Okay. The invoice that was sent after the service was performed, it's still a source document that is binding uh, to the owner. And Jenny acknowledging the receipt of an invoice is still legally binding. Her not finding the invoice because the accountant is on leave, and her having the invoice later, it's acknowledging the invoice. So Jenny has no option rather than to pay for the invoice because the service was performed, and there is supporting a document such as invoice mentioned in the case study that indeed the service was performed and the invoice has been acknowledged. So to transfer an economic resource, remember we said an economic resource, it is a right. It is a right that will increase, that is a potential to produce economic benefits. In this case, 1,500, which is a cash outflow, which represents a right the cleaning company has on Jenny's florist shop to decrease their economic benefits, which is to decrease their bank account. So Jenny has to pay 1.5 cash outflow from the bank. So that is the decrease in the bank account because Kulula has a claim on has a right to claim potential economic benefits from Jenny, which is cash. Because of the past event, Jenny's florist shop, it was cleaned in January. There's an acknowledgement and a record that yes, it was cleaned in January and it was invoiced as such. And the transaction was generated when the parties agreed where the cleaning is going to happen, what time the cleaning is going to happen, at what price. Okay. Now, that's the first leg we've identified. The double entry principle says for every debit, there must be a credit. Now, we need to identify another element because the question said both elements. So, second element looks like an expense and the definition of the expense. And ladies and gentlemen, the way I've written this thing, I expected to write it like that in the test. Definition, application, conclusion. A recognition criteria and conclusion. So decrease in assets or increase in liabilities other than those relating to distributions to holders of equity claims. Ne? Decrease in assets after Jenny pays for the shop's cleaning invoice in the near future. After Jenny pays for the shop's cleaning invoice in the near future, the cash she has on her business bank account will decrease because we've paid for the expense in the future. Then increase in liabilities, accrued expenses, which is a liability of 1.5, will be incurred as the expense have not been paid, have not yet been paid for. So as much as we're acknowledging the expense, but also acknowledging that we did not pay for this expense, we're going to pay for it at a future date. When the payment is made at a later date or at a later date, a new transaction will be recorded to reduce the accrued expense, which is the liability account, and decrease the amount of the liability owed, other than those relating to distributions to holders of equity claims. Expenses are not dividends, nor drawings. Therefore, they are not payable to owners as part of equity claims. They just affect the profit of the business. So now you've done the definition, you've done the application, you move to the recognition criteria. The element shall be recognized as a liability and an expense if it is relevant and it forms if it is relevant and forms faithful representations or part of faithful representation, complete, free of error, and unbiased. So, application of the recognition criteria. The 1.5 expense and the 1.5 liability is a relevant item to users of financial statements as it will affect their decision making. This is a florist shop. You wouldn't expect a florist shop to be very big. They function on a tiny scale. So it is very important. It is critical information for the shop owner to have good relationships with the suppliers, good relationships with the service suppliers. So a cleaning company to Jenny's business is a supplier. If Jenny does not pay this supplier, her credit record, the company's credit record is affected. So this being disclosed in the financial statements is very critical in terms of the reputation of the company. Disclosing the 1.5 and the 1.5 expense and the 1.5 liability in the financial statements would result in the information that is complete, free of error, and neutral. A florist shop, depending on where it's serving, but florist shop don't make above 500,000 a year, even if they're in an office building where flowers are bought a lot. They don't make much money. So them owing an invoice of 1.5 is a big thing. But if you look at Net Florist, it's making so much. Net Florist is a very successful company. So An invoice of 1.5 not being recorded, as much as it is critical information, it is important for accounting information to be complete, but it's not that material. But in a scale of a florist shop, that is, in a small florist shop in Parktown, that is critical. Okay? So, now to conclude, the accrued expense, the 1.5 will be recognized as an cleaning expense and also an accrued expense, which is a liability, a cleaning expense, which is an expense account. That is the conclusion at the end of the reporting period, which is 28 February 2023. Thank you, guys.